Hey everyone, it is Evan here from the Trade Risk on Friday, August 3rd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video with some sector analysis. So I'm cheating today. It's about 20 minutes, 15-20 minutes before the closing bell here on Friday. I'm looking to get a little bit of a head start on this video. It's a quiet Friday summer trading session, so I don't think we're going to miss a whole lot here. Starting the recording a bit early. Just note that if you do see prices bouncing around, we're not looking at the exact closing prints here in this week's video. It should be pretty close, barring some wild event here in the last 15 minutes, but just keep that in mind. So let's kick things off here with the S&P 500. We're looking at a weekly time frame. This is the cash market here, and you can see we are set to close right near the highs of this week, up 70 basis points, a nice stand by the bulls here. And importantly, when we look at this week's progress here, we did rebound nicely off of support after testing the lows from last week, early in this trading week on Monday, and early in the week, we were hitting down towards this 2,800 level, testing last week's lows. We did find buyers step in there, and we did rebound and close strongly, reversed all of the damage and went green and closed out the week near the highs. So from the intermediate term basis here, looking at the structure, this trend remains higher. We are trading above a rising 8 and 20 period weekly moving average, and we are holding above the upper level 2,800 to 2,790. This little mattress of support is still holding in there, so therefore the bulls are still very much in control here on the intermediate term time frame. The next big reference level for us looking ahead is going to be last week's highs, which come in around 2848. You can see we haven't quite got back up to retest them, so 2848 would be the next level to pay attention to. Above that, we have 2872. These are the all-time highs made back in January for the S&P 500. We still haven't got back and taken those out. So all looks good here on the intermediate term time frame. One thing I don't show on here, I like to keep charts as simple as clean as possible. But, you know, if you were to throw on some type of momentum oscillator on here, a MACD or an RSI, and you were to look at the S&P 500 on this ascent back up towards the prior all-time highs, what you're going to notice there is you're going to see some divergence. You're going to see if we do, you know, kind of crawl our way back up to these highs here, we're going to be doing it with less fervor, less momentum behind that retest. And what you'll see here is if we start to fail, which again, I just want to point out the other side, there's still at this point no indication of failing. Support is holding as we just discussed, but if we did start to fail here or fail back up at 2872, you would have, or many are going to start to point out, this negative divergence on a retest with a potential failure, and that certainly could move or lead us to a swift move lower. Not happening at this point. There is no evidence of that, but I like to keep an open mind here and just kind of point things out before they happen so we can plan accordingly. But if you are a big fan of looking at those divergences in terms of momentum, that's something you could take a look at on your own chart. So when we look at the daily chart now, a little more refined here for the S&P 500, we really saw yesterday, Thursday, was the big sort of recovery day here where bulls could breathe a bit of a sigh of relief as support did hold on this gap down. So yesterday, I think, was an important day to take notice. We had the market kicking off with some, I believe it was more tariff or some type of global macro headline risk here on Thursday. We saw the gap down below the prior couple of days lows, gapping into this known level of importance, 2,800, but instead of kind of just rolling over quickly and selling off or really, you know, turning into a nasty session, we saw the lows from Monday, the opening from Thursday, apologize. The opening from Thursday proved to be the lows of the session, and we saw a rally throughout the day, and in fact we saw a multi-bar engulfing bullish candle here on Thursday. So that was a very constructive, Thursday was a constructive day for the market as support held again, and we were able to take out the prior day's highs. And as you can see here, we continued that rally into Friday. Bulls continued that bounce, and next on deck is going to be the highs here from last week. Can we take these highs out around 28.48, or do we prove to be in some type of range? Do we get an up day on Monday and then kind of hesitate and roll back over and we're in some sideways range, or do we just cut right through it and this market is just set to retest the all-time highs made from January? That's what we're going to need to see. But as it stands now, we are above a rising 8 and 20 period moving average, and we are above Thursday's low, this support from here. Therefore, we should consider this market in an uptrend, bulls in control, and the worst case scenario, perhaps range bound in the short term, as long as we are below this 28.48 level. So that is the way I'm reading the S&P 500. This 2800 level is grown in importance as bulls defended it once again. So if you are again looking for this market to really kind of kick the can, roll over, get that bearish thesis on, you're going to need to see Thursday's lows taken out. 2800 has been saying all the way down to 2790, this zone right here. IWM very similar here. Yesterday got a nice move higher. Thursday was just a constructive day for the short-term market overall. IWM though is still suspect here. It is still kind of flirting with a important area here right around 167. We saw the breakdown from this level last Friday. This was our indication to get short here, the IWM on Friday. It did get a little bit of follow through on Monday, but then we started to rally back up. We exited our short trade on Thursday as this started to rally above Wednesday's highs or so. It's basically, I think we exited pretty much where this market is trading right now. So we no longer have this short position on. We took a small loss getting short here on Friday on this breakdown, exiting here as we trailed up our stop pretty tight. But I wouldn't rule this market out. I'm just really trying not to get sucked too much into the summer chop here. We could be forming some type of bear flag. We're certainly not out of the woods yet, but volume here, oops, sorry about that. Volume here tracking about average, a little bit light here on Friday, dancing around this area. So there could be quite a bit of noise here. I think structurally this is still the loud sort of price action event in play here, this breakdown, but we are flirting back with this level here. So it'll be interesting to see how the IWM acts into next week. Can we swiftly close above 167 and start moving back into this range, or is this going to form some type of channel bear flag here that ultimately breaks back down? Something to be seen, but IWM still off of these highs here and a little bit suspect in the short term. The NASDAQ 100 did have, again, a very nice session here on Thursday. We can thank Apple as it reported its earnings this week and really fueled this market, I think, overall to the upside as it crossed that $1 trillion in market cap. The Qs reclaimed this horizontal level, this 177 and change. These were the highs from June that the market broke out from in mid-July. We broke down from that level back on Monday of this week, and now with a little bit of a stutter step Tuesday and Wednesday, we came ripping back to the upside here on Thursday, and we are finishing the week near the highs. So the Qs still are below this level here. They are still below, say, this trend line, kind of on the opposite side of the slope at which this was rising just a week or two ago, but it is, at least in the near term, did manage to kind of push up above this short-term level, and it's kind of in a mixed area right here. Given it's summertime, I probably would expect some chop, but it is above, once again, a rising 8 and 20 period moving average. So kind of like the S&P 500, we basically wanted to monitor, can it get back up to these old highs? How does it react around those highs? Can it take them out, or does that prove to be a spot which sellers come back in and meet this market again to the downside? So that is the cues here. Nice finish to the week. Mixed bag. Did finish up on the week 1.31%. So I think you need to respect the reversal, respect the fact that we are reclaim some of these averages here, reclaim some of these resistance areas, and we should be paying attention to, I would say, Thursday's low and this level here around 177 and change, the June highs. That's what I'd be paying attention to, and then Thursday's lows to the downside. So that is the market environment overall. The world did not end this week. We did see stabilization. The bulls are still stepping in here, through this summertime chop as it stands so far. So let us get into some of the other major markets now. We'll go to TLT, which did get beat up here to start off the week, but then saw a bit of a recovery into the end of the week. You can see we are ending slightly down here, but a nice recovery on Friday here as it tries to get back into this range that it spent about 5 or 6 trading days in. Again, we zoom out here, sideways channel, still very much intact. We're in the middle of that channel, so nothing structurally has changed whatsoever. Short-term trend is lower, and longer term we are moving sideways in a range. USO, we will look at that next here. You can see on the week did finish about flat, and again, this one here had a nice recovery. It was lower at the beginning of the week. Most of those gains, or that recovery, was staged on Thursday, so we had a bit of a kind of a breakdown from this channel, this flag that it was forming, and then really didn't get a whole lot of meaningful follow through. Thursday it stabilized, and Friday we're printing an inside session. So a very flat moving averages here. Looks like a headache, and if we can start to reclaim the slope here, then bulls would be back on track, but for now doesn't seem all that interesting to me one way or the other as it sits kind of in a larger range here moving sideways. Next up, natural gas. We saw very similar kind of early weakness followed by some late strength here, 2.32% to the upside to finish off the week. A lot of that gain coming from Thursday and Friday, certainly, but Friday's gap up and attempt to move higher here, 1.13% on the week, and on Friday. And you can see again, nice range here on Thursday. So natural gas, we thought we were going to get some type of potential breakdown here from this trend line. Bulls stepped in, put in kind of a sort of an awkward higher low there, but the trend here is still kind of making its way to the upside in this channel, in this shorter term trend, and there is a good amount of supply back here from mid-June just above us right now. Finally, we'll look at metals. We'll look at metals here in gold. You can see on the week did finish lower, almost 1%, making new lows for the year. This still continues to struggle to catch a bid or really find its footing. It did start to move sideways here in the very short term last week or so, but new lows were made, and sellers are still very much in control on this trend. It looks like it's going for let's see, 7 out of the last 8 weeks have been to the downside, and it's lost approximately about 8 or so % over the past over the past couple of months, 2 months of trading. So it certainly has been beaten up and stretched to the downside here when you look at some of these longer term moving averages. Eventually, you'd think you'd get some type of reversion here, but again, you'd have to be really active. You got to know what you're doing because it does still seem like sellers are very much in control, and for me, just not interested in trying to dip by that or knife catch it at this point. Silver, on the other hand, didn't quite make new lows this week, and that is a slight encouragement. Still structurally, it's in a tough spot, but we do have the signs of some sideways action developing. Again, we did not take out the lows here back from Thursday the 19th, so that is constructive. We'll need to see if the bulls can start to stabilize this further and then start to work at taking out this short-term resistance up here at 1470. As it stands though, sellers moving averages all pointing lower, so the proof here is on the bulls to prove themselves that the worst is over in terms of this selling pressure. So let us get into some of the sector analysis now. Let's look at what moved this week's action. We'll sort it by performance for this week, and our top performer is healthcare. You can see a nice trend has emerged here as this makes its way back towards the January highs. We've, since escaping, say, 86 and change, we did a little bit of a dance right here in this consolidation just a few weeks ago. But once it sort of cleared through that, we've really started to stretch to the upside. It is extended, but healthcare, they have been showing up certainly on my bull scans. This space is pretty hot, especially some of the individual names. So XLV working to the upside over 2% this week. Staples also continuing their rally higher here, and they've made quite a recovery after getting really crushed for the first 4 or 5 months of this year. They have recovered at this point about 50%, maybe even 60% of the January drop from 59 all the way down to 49. They're back around $54. There was prior kind of inflection points here, lots of supply in this area, and you can see it's rallying right into that now. So again, chasing it, probably not the best reward to risk here if you're allocating new capital into XLP, but the individual stocks, depending on what you're looking at, you may find some that are setting up a little better or aren't quite as extended as the XLP ETF. Third on the list here for performance this week, 1.5% to the upside, was biotech, and it would have been number one if it didn't start to roll over a bit here, or pull back, I should say. Roll over sounds harsh. Pull back here into the end of the week. You can see it did drop below this consolidation late last week on Friday. It broke down, saw follow through selling Monday, but then it saw this nice kind of V-shaped recovery in towards the end of the week, and it's reclaiming some of these moving averages. Note the volume extremely light this week. So we had heavy selling last week. We saw a very light recovery this week. It's kind of a theme with most of the market this week. We saw lighter volume in general than last week, so it's something else to keep in mind for all you that really like to pay attention closely to what volume is telling us about some of these moves. But IBB recovered some of the moving averages. Again, let's see how it reacts as it gets back up to this prior supply and potentially retest, if it can get up here, to retest the highs made from just a couple weeks ago. On the downside, we had XLE was the worst performer this week, down almost 2% here on the week. We look at this chart though, looks fairly insignificant. Structurally, nothing has changed here. We are still moving sideways in this range. In fact, it looks like it could potentially be a healthy looking consolidation after the nice move up through April and May. Looks like it needs its more time. Hasn't quite made a meaningful move below multi-week support or resistance. It's kind of sitting in the middle. So let's kick the can into next week and see how XLE reacts going into the second week of August. XLI on the bottom second to worst performer this week. It was only down slightly, so it was a pretty positive week for sectors overall. This was only down a quarter of a percent, but you can see here XLI did get a little bit of a move lower off of resistance. We would expect a little bit of a reaction here as it gets back up to all of these peaks, all of these inflection points. So XLI did started to stabilize to the end of the week. So for the most part, when we look at XLI here, it is still just kind of rising in this channel here, in this slope, and really we haven't seen a break out of this structure over the past couple of weeks. Finally was financials, slightly lower here on the week, and very similar to industrials, it ran into resistance here. This is where we would expect a little bit of a reaction. We got the reaction lower. We saw a nice kind of reversal stage on Thursday, follow through Friday. Can it get through 28.30? Ideally, with a significant resistance spot like this, you would like to see financials make a move with authority, with volume, to show some conviction that it is in fact ready to take out this resistance area, that is what you'd want to see if you're a bull on this space. Otherwise, I think you're going to be cautious and just at least just observant of how it reacts at this prior resistance area, which has failed has failed all these rallies over the past couple of months. So that is the recap for this week, and it looks like I'm finishing just as the final bell has dinged, and we look here, looks like the SPY ETF did go out right here at the highs of the week. So nice save by the bulls. Overall, they do still have control now of this market. It was a little dicey into the start of this week as we were starting to pull back and break through those short-term support levels. It has since recovered those levels, and we now have some good levels to pay attention to going forward. So that is all I have for this week's video. Thanks so much as always for watching. If you like the videos, you can subscribe to our YouTube channel. Keeps you up to date with all of the latest that we're publishing. Have a great weekend, and I will talk to you next week.